Well, more turmoil in the cryptocurrency market. The blockchain behind the collapsed Terra USD stablecoin and the affiliated Luna token start processing new transactions for the second time in less than a day. That's after both stablecoins continued to decline today. The losses prompted Terra USD to be depegged from the dollar earlier this week. And Tether also dropped below its dollar peg yesterday. But the biggest cryptocurrencies rebounding from their recent lows, with Bitcoin now comfortably at a $30,000 mark and Ethereum also climbing over the key $2,000 mark. Cryptocurrencies have been swept up in a sell-off across high-risk assets. With U.S. inflation running hot, investors fear the impact of more aggressive central bank tightening. The sell-off has taken the combined market value of all cryptocurrencies to $1.2 trillion, and that is less than half where it was last November. And for countries such as El Salvador, the plunge is disastrous. Its gamble on Bitcoin has already led to losses equivalent to its next bond payment and shows the increased risks posed by its experiment with the cryptocurrency. For more, Henry Arslanian, host of the Crypto Capsule, joins us from New York. Well, Henry, some semblance of calm in Bitcoin and Ethereum after, the past 2 days crash, but stablecoins, those are still under pressure. Why the divergence now, whereas, investors had just lumped all crypto as a single asset class in the sell-off?
Absolutely, Elizabeth. As you mentioned, it's been a rocky month in crypto markets and a lot of more high-risk stocks and assets globally around the world. But when it comes to really crypto markets, the collapse of Terra Luna has been really acted as a catalyst. I think it's really important to understand that within the crypto community, there's a very clear distinction between these different stable coins. For example, the stable coins are asset-backed, backed by real fiat reserves, whether it's USDC, USDT potentially, and through USD and others. Whereas when it comes to the Luna Terra USD, this was an algorithmically backed stable coin. Means that there was actually no fiat money backing it. It was purely their own currency that was backing it. And when times were good, such an algorithmic stable coin was doing very well. But when times got bad, it led to the collapse that we just saw that happened in the last 72 hours.
Yeah, so Henry, many have likened this Terra USD's loss of its one-to-one peg to the USD to a Lehman Brothers moment for crypto. Do you think so?
100%. I think what happened in the past week is very similar to what happened in September 2008 in traditional financial markets. The week that we just had will be studied in history books when it comes to crypto for a couple of reasons. One of them, there's been a lot of losses. A lot of retail investors, particularly in emerging markets, lost a lot of assets and money within the Terra and the Luna ecosystem. Second, this actually gives a lot of ammunition to a lot of the regulators and policymakers. We have seen in the last 2-3 days already, many policymakers from Janet Yellen in the U.S. saying that we may need a regulatory framework for stablecoins, to the EU saying that we potentially need to ban it, to actually the FSB, the Financial Stability Board, coming and saying that potentially they should come and oversee the space. So I expect to see a lot more activity in the space, particularly even from a legal perspective. I think we should expect to see lawsuits and legal actions being taken against this Terra Luna incident, in particular because the company behind was very public, its founder was very public, and the losses are quite meaningful. So I expect to see legal activity as well, lawsuits take place over the next couple of weeks and months.
Henry, do you think we could see more of such crashes recurring? But as you said, authorities could be stepping into the picture more.
I think it will be very naive for us to think that such events will not take place again. Would a similar crash happen in an algorithmic stablecoin? Probably not. I think everybody got their lesson and understood that there more due diligence is required on the mechanism and what we call the token economics behind such assets. However, the crypto industry, like in other industries, is moving very, very quickly. And there's many new frontiers that are being, developed at all times, whether it's DeFi, whether it's NFTs. For example, we still have scandals in traditional markets, despite all the regulation that we have. So I think it's still important that we look at it. There will be new incidents coming up, but it's important as an industry we put the right safeguards in place to ensure that when they happen, we have the right measures and mechanisms to contain them.
And do you see, this week's events as a setback for stablecoins? Because, some governments such as the UK have been moving to try and get stablecoins recognized as a valid form of payment.
Yeah, good question. The stable coins have been continuing their growth, and I expect the growth of stable coins to continue. We have now over $180 billion in stable coins globally, and I expect this number to grow significantly over the next couple of weeks and months. However, I think what I'm really watching very closely right now is how the policymaker is going to react. We mentioned the UK that is looking at recognizing it as a form of payment. I expect other governments to do the same. However, I think this is stable coins can pose a challenge to many central banks, especially in emerging markets. Today, when you look at crypto transactions globally, around 95% of them are linked to the US dollar, some on fiat, but mainly using stable coins. But if you're right now in an emerging market central bank, this can create certain risks. Good example are countries like Turkey, for example, Lebanon, where because of inflation and other reasons, people want to store value in a means of payment. And we're seeing many people go back to using stable coins. And if people start using stable coins as not only as a store of value, but also to make payments, especially cross-border payments, this can actually be a threat to their local currency. And it's no surprise that we have seen a lot of global policymakers really bring up this risk and try to actually mitigate it. And this is why I expect to see more policy-making activity around stablecoins over the next couple of weeks and months. And now policymakers have the best argument to show why this needs to be overseen.
Oh, thanks for that, Henry Arslanian, there, host of the Crypto Capsule.